live from Nasdaq's global headquarters in Lower Manhattan. This is Advisory Live, brought to you by Nasdaq Corporate Solutions. I'm Will Briganti. Joining me on today's program is Josh Ellman. Josh is an advisory services analyst at Nasdaq Corporate Solutions and is a specialist in the consumer and retail industries. Josh, thanks so much for being here.
Nice to see you, Will.
So on today's program, we're going to dig into the potential border adjustment tax and how that could potentially impact the consumer and retail industries and the broader market. So Josh, for our viewers, can you kind of give us an overview on how we got to this place?
Sure. So we currently have a Republican-controlled Congress.
Right.
We also have a Republican presidential administration who are both very keen on growing the economy. Now, the president, Donald Trump, has said that he will enact various legislation to try and help grow GDP, and he is aiming for GDP growth of around 3 to 4% per year.
Right.
So definitely a big hurdle.
Right.
Now, he's green-lighted certain energy projects. He's asked his head of defense to re-examine the military. He's reduced and or reviewed various industry regulations, which have been all applauded by the U.S. equity market. But he needs to do more to get to that 3 to 4% level. So two key pillars of his plan are tax reform and a grand infrastructure plan, which is in the ballpark of about $1 trillion.
Right. That's $1 trillion, you said, right?
I did.
With a
yeah.
T. Yeah.
Yes, that's definitely a big number.
Yeah.
But from what we gather, it's going to be more or less a public and private partnership.
Okay.
Now, the president and the Congress are certainly going to have to contend with some headwinds in terms of getting their policies enacted. Such vested parties might be potential or current U.S. debt holders, rising inflation, ballooning national debt, currency markets, as well as the U.S. Congress themselves. So in order to get to that, in order to appease those parties, the president needs to roll out things to help pay for his agenda, and that's where we get to the border adjustment tax.
Right, okay. Well, that's an incredibly helpful overview. So any specific details on this potential BAT that you can provide?
Sure, absolutely. So under current U.S. tax code, companies can actually deduct their cost of imports from their revenue, thereby creating lower taxes for those companies. Under the potential border adjustment tax, companies would no longer be able to deduct those costs of imports from their revenue going forward. Simultaneously, companies that sell goods or export goods abroad wouldn't pay taxes on those transactions. So the companies that would ultimately win from this border adjustment tax plan would be companies that manufacture goods within the United States using U.S. materials and selling those goods globally.
Right.
Now, we do have a bevy of companies that have taken advantage of the current tax code, whereby importing cheaper goods from abroad and then selling them here or globally.
Right.
But those companies are very concerned about what's going to happen with their bottom lines. Now, the carrot for those companies, according to various economists and policymakers, is that the U.S. dollar should strengthen over time. As a result, having their cost of imports go down, which would offset some of the increased taxes that they would have to pay. However, again, the key winners would be the companies that manufacture goods here in the United States and then sell them abroad or here. So that's really the gist or the basic premise of the border adjustment tax.
Okay.
Now, the United States runs a trade deficit of approximately 2.5% of GDP.
Right.
Economists forecast that this border adjustment tax could bring in about $100 billion in annual revenue per year. So that dovetails very nicely with Trump's pro-growth, net neutral spending agenda.
Great, excellent overview, thank you. Obviously, with your current work with retail and consumer issuers, how is that sector kind of taking this potential BAT news?
Not well, especially the retail space.
Yeah.
The retailers are the ones that would probably be the most negatively impacted by the potential border adjustment tax. So they're really waving the caution flag.
Yeah.
They're letting consumers as well as government officials know that costs would potentially rise as a result. And we're even hearing from organizations such as the National Retail Federation that costs for an average family may go up by as much as 15%, which equates to about $1,700 per year.
Yeah.
We're also hearing from the Center for Automotive Research saying that a cost per vehicle could rise by as much about $2,000 for a potential vehicle.
Right.
So those are pretty significant costs.
Yeah,
and we're
of
also
course.
hearing too that everyday items may go up in price as well, such as your beer and guacamole even.
Right, of course. That's right. Of course. Yeah, absolutely. Now, looking specifically at some data, with tools like Nasdaq IR Insight and the conversations that you're having with your clients who are listed companies, are you starting to hear from more U.S.-based corporations about the potential implications of the BAT?
Yeah, we are, certainly. I actually performed a search in IR Insight, and I reviewed various earnings transcripts, conference call transcripts, conference transcripts, and we're hearing companies have to talk to the potential border adjustment tax more and more. We're hearing questions being lobbed at them from the analyst community as well. And at the same time, we're even seeing companies proactively put talk around the border adjustment tax in their earnings scripts. So there definitely has been an uptick in talk around the border adjustment tax. And what's interesting is that I went back to November, and the talk and rhetoric or commentary around the border adjustment tax was minimal, if non-existent. So there's definitely been a wave of change and focus for these companies. Now, what's interesting is that not all the commentary is negative. You do have major industry players also speaking about the potential for the border adjustment tax. So you can clearly see the lines being drawn in terms of the winners and losers. But the overall takeaway that I saw was that these companies don't know where this thing is actually headed yet.
Sure, okay. That's an excellent overview. I mean, obviously, if you look at some of the headlines, the Trump administration's been pretty focused the last couple of weeks on healthcare reform. So any kind of expectations on when they may shift their focus to this potential border adjustment tax?
Well, I'm not an economist, I'm not a lobbyist, I'm not a strategist, I'm not even a fortune teller. So I don't know what will be the end result. But what I do know is that if this potential border adjustment tax does go away, I do think you'll have a rally amongst consumer-related companies, especially discretionary-oriented companies. So you should see a reduction in volatility around the space as well as some short covering. However, I do think the gains will be relatively short-lived as investors begin to or focus more on industry fundamentals as well as company-by-company fundamentals in an ever-changing and dynamic retail landscape, which is a topic for another time.
Yeah, absolutely.
But at the end of the day, if the border adjustment tax does go away, I do think you see a rally amongst consumer companies and other industries that may potentially be impacted by the border adjustment tax. But ultimately, market fundamentals, M&A, and industry consolidation will ultimately be in focus for those investors. So it really will be a stock picker's market going forward if it doesn't pass or doesn't get enacted.
Great. Well, Josh, thank you so much. That's excellent insight there on the potential border adjustment tax. We look forward to having you back soon to discuss some consumer and retail earnings once those wrap up for Q1. And thank you to our viewers for joining us today. If you'd like more information about Nasdaq IR Insight, which was that tool that Josh mentioned, be sure to visit our website. That's business.nasdaq.com. And you can also check out all of the daily intel that the rest of the advisory team publishes on our corporate blog as well as on our social media feeds. So you can join us on Twitter at MyCorpSolutions. Josh, thank you so much for joining us today.
My pleasure.
We look forward to having you back. And thank you to our viewers for tuning in. We look forward to seeing you back here next week on Thursday for our next edition of Advisory Live. Thanks so much for joining us, and have a great week.